You don't need an engine anymore, so now they can, have freer entry. Even if these tariffs are successful, is there a world where they could backfire on the U.S. auto industry, slowing down the push to all electric or driving consumer resentment over high vehicle prices? Here to discuss that is Yossi Levi. He's founder and CEO of Car Dealership Guy. Yossi, it's great to have you here. What's your take on all of this? I mean, it's kind of that point Michael was making is if the world is going in this direction of cheap Chinese EVs that are evidently of fine quality, what happens if the U.S. is not part of that?
Yeah, look, on one hand, these tariffs, while there's no Chinese cars being imported today, they do protect U.S. jobs. So that's one side of it. All right. The other side of it, you could say, is that it's actually inflationary for consumers. So it does not benefit consumers at all. And it's not how our free market should operate. And if you really think about it, I do agree with Michael that long-term Chinese cars will enter the United States. When I speak to lots of dealers, and it seems like everyone is concerned about Mexico. That seems to be like the big focus on what happens. BYD isn't big in Mexico already. What happens if China tries to bring vehicles from Mexico into the U.S. that way? In the short term, it seems more reasonable than possibly importing directly from China, especially given tariffs. And what we see going on right now.
Yossi, here's my question. For the last 4 years, let's call it, maybe 3 to be really fair, when the U.S. auto industry was really focused on new EVs and new models. I mean, the Ford F-150 EV is a $100,000 vehicle. I mean, why did nobody make a $20,000 entry-level EV that could have perhaps forestalled the arrival of this Chinese competition?
Well, it's interesting you say $100,000 because I believe that's how much Ford is actually honest or losing on every EV they sell on a net basis. So It's pretty bad. But to answer your question, so what happened was we had a decade of low interest rates. Vehicle prices crept up. Stellantis is the notorious example where they increased prices from 2019 all the way through about 2024 by about 50%. And so what you had this decade of, just zero interest rates. People were affording more expensive vehicles. And cheap vehicles were simply not a thing anymore, right? The American consumer got hooked on luxury vehicles, bigger vehicles, more options, more features. Well, guess what? Interest rates are not zero anymore, right? Today, I tweeted yesterday that the average interest rate on a new car, a new auto loan today is nearly 10%, right? 10% on a new car. That's a 20-plus year record. And so you're in an environment where consumer expectations need to retract. I mean, people can't afford this. And so, but we've built up to this point in the economy. And so you have a really, really problematic environment where the vehicle prices are a lot higher than what people can afford.
Exactly. And perhaps part of the issue, to your point, is it true that U.S. automakers, including Tesla, can't produce a $20,000 rival to cheap Chinese EVs without massive losses? And if that's the case, shouldn't we have just subsidized their ability to do so that they could, again, kind of organically stay ahead of what's coming?
Yeah, it could be. I think there hasn't been a large focus on it for the last, several years, decade, really. So now the market is starting to realize, wait, some consumers want EVs, many more want hybrid. And so maybe we should rethink our strategies and really focus on what the consumer wants, right? We overbuilt supply for the last 5 years when it came to EVs, and that we got ahead of ourselves. And so now we're kind of getting back to balance. And I think to your point, time will tell. I think the manufacturers are realizing that it is a different economy. I don't know if we're going to go to cheaper cars, to be honest with you. I think what's more likely is we're going to see higher leasing penetration with consumers and alternatives to traditional financing, because that does lower your payment, you say 15, 20%. And so that's sort of that's been the bridge for consumers.
So you kind of answered my question, but I'm going to ask it anyway. You talk to a lot of car dealers. What do dealers tell you about the current market, and what are dealers telling the manufacturers about what customers want?
Dealers have been very vocal to the manufacturers that they have overswung the pendulum within the EV market, right? I want to be very clear. I think there's phenomenal EVs on the market, and it's a growing market. And I think it's going to continue growing, but the pendulum swung too far, right? We overbuilt supply of the EVs that people don't want. Many of these are, frankly, Tesla has been the leader. They still command about 50% market share. But they have dropped their prices, 20 to 50% over the last year and a half. And so, EVs are consistently higher.
Paid the higher price. Yeah.